outraged that as we stand here today, that we could not raise the debt ceiling by voting for that.
Some of the action there from the House this morning. To discuss the deal, I'm joined in the studio by the ABC's business editor Peter Ryan and Professor Fariborz Moshirian, who's the Director of the Institute of Global Finance at the University of New South Wales School of Business. Gentlemen, welcome. Peter, first off with you, they got a deal, but it's been pretty messy, hasn't it?
Yes, and what it means, though, Joe, is that there should be a much easier passage through the US Senate, which is controlled by the Democrats, and hopefully by this time tomorrow morning, before the Australian markets open and Asian markets open, there will be that real certainty that there is a deal and that the US will not go anywhere near defaulting on part or all of its debt.
Okay, so Fariborz, ultimately, what position does this leave the US in, though, in terms of its debt? It's going to continue to grow.
Well, there are some who argue that because of these budget cuts of about 2.1 to 2.4 trillion, the U.S. economy may not necessarily grow as strong as they expected, although some of these major cuts are going to kick in after 2012. But nevertheless, they have to find ways to cut their budgets in the next 12 months or so, and that itself is going to put downward pressure for economic activities that they would like to see in the United States.
Now, Pete, is the damage already done, though, to the US?
Yes, look, a high degree of damage has been done to the reputation and the credibility of the United States, and it's worth remembering that Standard & Poor's is on the record as saying unless they saw $4 trillion worth of spending cuts, that the US might lose its AAA credit rating. So that really downgrades the United States in the face of the world, not so much in financial terms, but really as far as the integrity and the reputation of the system goes.
So, Fariborz, what kind of impact would that have if that downgrading did actually end up happening?
Well, there are a number of implications. One is banking sector should recapitalize basically and start reevaluating their balance sheet. And there are people who are investing massively in U.S. Treasury bonds who have to have second thoughts as to whether they want to keep their assets in U.S. denominated bonds or they move away, say, to Europe or Asia.
So will the US dollar remain the key reserve currency in the world?
Well, this current political, if you like, challenge in U.S. has created the beginning of the change for the European and Asian financial system, in a sense that people are now looking at the euro as second major reserve currency in the world, and China is now keen to ensure that Chinese yuan will emerge by, say, 2015 or 18 as another world currency.
So, Peter, do you agree that we're seeing this as another step in the rebalancing of the financial world?
Yeah, it's history in the making. It won't be immediate. It'll be much the same way that the British pound really fell out of favour, but that was a gradual process that took place over decades. But probably what we'll see over the decades, as Fariborz mentioned, is the gradual demise of the US as the reserve currency, the growth of the euro, and obviously the Chinese. But there's also a political price that Barack Obama has to pay as well, and he now has to go out and defend his back down to accept greater spending cuts to the people who put him in office in the first place, his supporters, and particularly from the liberal side of American politics.
So, Fariborz, what do you see as the future for the US? The US has for decades been the most powerful nation on earth. How do you see that changing over the next 30 years?
Well, we know that since global financial crisis and now the current challenges that the U.S. economy is facing, Asia is emerging as the engine of growth. European Union, despite their major challenges in recent months, they are consolidating. They are trying to compete against US and Asia. So they are emerging as a significant bloc over time. And of course, what we refer to as BRIC, that means Brazil, India, Russia, China, they also are trying to form another bloc. And so what we are seeing here is we are going to see a more balanced global economy where the U.S. is not going to be necessarily the dominant force.
And what did you think of the performance of the politicians there over the last couple of weeks?
Well, in the United States, I think the damage done as a result of this debacle is quite profound for global financial market, because many people now will have second thought as to whether they should hold U.S. denominated assets regardless of whether the U.S. will remain AAA rated.
And it really lays the groundwork for not just days of volatility but months of volatility. And you also look at the reputation of the United States. You can build up a reputation over decades or hundreds of years but lose it in the space of a few weeks, as we've just seen in the United States.
And when people do, as you say, maybe decide to move away from those US denominated assets, what is the practical effect then?
Well, the practical effect is we are going to see shift of capital to Asia. We are going to see more capital into Europe. And as a result of that, in a sense, we are going to see probably more economic activities in other parts of the world, where indirectly the U.S. may benefit from stronger economic activities in Asia and in Europe. But nevertheless, they may lose their credential as the World Bank, in a sense that most assets used to be denominated in U.S., if you like, bonds or similar assets, but now people have got different choices to make.
Okay, now just before we wrap up, moving on to the domestic economy and the rates decision today. I don't know if this is in your remit, Faraboz, but we'll definitely ask Peter Ryan about it. The majority of economists see that rates will probably stay where they are today.
Yes, it's all but about three economists believe that rates will stay on hold, but it's an interesting argument, and this meeting of the Reserve Bank, which is going on as we speak, is probably one of the most closely watched meetings in recent months, taking into account that we haven't had a rate rise since November, but mainly because we've had these unexpectedly high CPI figures for the June quarter, which showed that inflation is on the march, and that's something that the Reserve Bank has to look out for. Now, they have to manage the mandate to keep inflation between the comfort zone of 2 to 3%, but also manage the patchwork economy with a single set of interest rates. But the general view is that rates will stay on hold today, but perhaps there's one hike left in it for this year.
Yeah. Do you want to throw your hat in the ring there, Faraboz?
No, I fully agree with what Peter has said. Cool. And of course, we have to wait and see what will happen to global economic outlook with regard to US as well as Europe.
Okay, Faraboz Moshirian and Peter Ryan, thanks very much. So the Reserve Bank Board is meeting right now, as Peter Ryan just said, to decide whether or not to lift interest rates.